KCB Group that's in Kenya, has signed an agreement to acquire an 85% stake in the Democratic Republic of Congo-based lender Trust Merchant Bank. The two lenders said in a joint statement that the transaction is expected to close by the end of the third quarter of 2022, subject to regulatory approvals. KCB Group also said it intends to acquire the remaining 15% stake in Trust Merchant Bank in less than 2 years. The transaction will be done in cash based on the net asset value of the DRC-based lender, using a price-to-book multiple of 1.49. Not too bad. Joining us to discuss further, Churchill Ogutu, who is an economist at IC Asset Managers in Nairobi. Churchill, good afternoon to you. Yeah, you're 2 hours ahead of us in Lagos. Good afternoon. What's starting with KCB? What's the appeal for KCB when it comes to the DRC banking sector?
Thank you, Otiri. I see the appeal is in regards to one, we've seen this is not the first transaction whereby a Kenyan banker is getting into DRC market. We have DRC market is now the last country that is joining the East African continent, East Africa Community Bloc. So there's that kind of getting a footprint into the wider East Africa community market, and we've seen that a number of the banks. Prior we saw Equity Bank getting into forays into the DRC bloc, and also now lately we're seeing KCB Group following in suit. So the appeal obviously is because of the client, whereby some of these banks within the East Africa community, they have client channels within the DRC market. So it's more of a strategy that is following where the clients are, and that's what's playing out even with this latest move, basic KCB Group now acquiring a DRC lender.
Thank you so much for that. I guess what does it say about competition in Kenya's banking space? Is it, I guess better to look outside?
Yeah, I think it's quite, I can say it's balanced in the sense that there are three distinct tiers across the banking sector space. But that's it, if you look at some of the metrics, net interest margin has more or less come down from highs of 9%. That was 6 years ago, 2016. Now it's around 6.5% as at the end of last year. So we're saying that the margins have quite shrunk in this current market. There's lots of competition. So that's now informs the move of getting across the borders. And that said, you've seen even a number of fintech players coming on board. You've seen 2 or 3 fintech players acquiring the microfinance institutions based in Kenya. So it's just speaking to the fact that now this whole financial services space is getting saturated. So most of the lenders, most of the big banks are now trying to expand their route, their wings across the region. So that's what's informing this expansion drive that we are seeing being driven by the Kenyan players.
Excellent. So I guess if I ask your take on the Pan-African business model for financial services at this present time, it seems like a wise move then?
Yeah, it's a wise move. I'm looking at it from the lens of the African Continental Free Trade Agreement, whereby, yes, it hasn't picked up momentum, but ultimately that's the end goal. So that's what is informing the drive across the Pan-African expansion. We've seen even a number of West African banks looking at East Africa, East African banks now getting closer to the Central African space. So that is what is playing out in the moment. But that said, I think in the short term, there could be some teething issues. We've seen even the expansion that have played out across the East, getting into the Central African region. They've found challenges in terms of the integration, the toxic assets that are in some of those banks that they have expanded into. They have not been able to fully smoothen those risks. So in the near term, obviously there'll be some challenges, but in the long end, and more so as this Continental Free Trade Agreement comes into fruition, they'll be able to realize benefits of scale.
Excellent. I was about to ask you about that, the IAF-CFTA. Okay, let's move to this Central Bank of Kenya CEO survey. How reliable are these surveys carried out by the central bank? Are the CEOs being honest in their responses?
Well, I can say that they are just being, it's on a relative basis, because right now they are seeing a bit of some optimism in as much as we are getting into electioneering period. We have general elections next week. But yet they're still positive. So to them, I think they're just looking beyond this event. We have political risk coming out. It's heated up a number of the last couple of years, but they're just saying that, okay, in a month's time, in 2 weeks' time, this electioneering risk will be behind us. So, from that perspective, on a relative perspective, obviously they're just looking beyond the election. So that's just giving them some optimism that businesses will bounce back after this, after we've done with the general polls next week.
You gotta love the private sector. They're always very forward-looking, always looking ahead. Inflation and the business environment, according to the survey, seem to be top concerns for the CEOs ahead of the elections next week. I guess does that also sound accurate?
Yeah, absolutely. We saw the inflation number for last month. It came out last week on Friday, a print of 8.3%, which was at a 62-month high. So, and that being the case, the expectations, inflationary expectation is that it will still continue trending higher. We expect that fourth quarter of this year, from a base effect perspective, we could see the numbers still continue rising. So from that perspective, inflation is still quite key. It ranks higher in terms of the risk that the CEOs are facing, and also the cost of doing businesses. We're still within the political risk environment, so the businesses are still jittery, whichever the change in the presidency that will come, and before now they settle in, it will take a while for them to be able to adapt even their businesses. So those two are quite key for the CEOs. So I am in full agreement with the CEOs' assessment in terms of their outlook.
Okay. So speaking of that outlook, how do you see things playing out after the elections, I guess, for the business environment?
I think in the short term, it will take a while before normalcy resumes. There's usually that 100-day in office. So as the new presidency settles in, even the businesses will also follow, take that cue. Remember, 5 years ago, when we had the election, we had a repeat election. So that also introduced a layer of uncertainty. We are not sure whether the results will be, the winner will be declared after the first result. So there could be the possibility of a second round election, repeat election. So that means that after the election next week, and if there's a repeat, we are looking at another additional 2 months of uncertainty. So that is also baked into the outlook for businesses and political risk. If at all, once we are able to move away from that, we can now be able to see businesses resuming the operations quite in a more durable manner. So I expect that even the government spending will be able to be key in terms of how the government of the day comes in, whichever policy direction that they'll be able to give to the businesses, to the general economy. That's also what will also dictate the pace of recovery in the country.
Great stuff. Very in depth there. Let's talk about this 2-month extension of maize import duties. Do you think that's going to be enough to, I guess, cushion the pressure that's being faced by not individuals that buy maize and also importers and so on and so forth?
Yeah, to an extent. Let me just put it into some context. We are at a scenario whereby the maize flour is retailing something in the order of $2. So there was a subsidy program that was put in place like 2 weeks ago with the intention of now reducing the retail price for maize flour. But that being the case, we haven't seen there's been a shortage of this subsidized maize flour. So that's a key issue. So as we get into this importation of maize from other countries, that is at least geared to address the supply issues. Right now, East Africa region is on a dry spell. So we are expecting that as we get into imports from as far as Mexico, we can be able to address the supply challenges. So looking at the matrix, we are looking at, we intend to import 540 million bags of 540 million kg of bags from in this window of duty-free importation. And that's around a fifth of the total inputs production of maize over the course of last year. So that's quite significant. The time frame, I think, speaks to the extension. They were not able to import it between May, when the first Gazette notice was put in place, up until right now. So that now informs the 2-month extension. So that we can now be able to see it being realized, or at least a significant chunk of that target being met by the end before this extension expires.
Thanks, Churchill. Just very quickly, about running out of time. Has the tariff model worked for improving maize production in Kenya, in your view? It doesn't seem like it has, based on where prices are now. Maybe that's Russia, Ukraine, but how do you see it?
No, it hasn't worked in the sense that the issue actually should be on the supply side, on the production. There were a number of measures that were put in place, large-scale irrigation schemes, at least to address higher maize production. But over the years, that hasn't fully worked. Hence, we get into these stopgap measures year in, year out, whenever there's a drought issue in the country, whereby we now seek recourse from duty-free importation of maize. So clearly, that hasn't worked. But now the underlying problem should be on the supply side. The maize production, we need to ensure that if we had that large-scale irrigation right in the first place, we could now be able to smoothen the risks that occur whenever we have the drought issue in the country.
Churchill Ogutu, economist with IC Asset Managers, joining us live from Nairobi. Appreciate your time talking to us about the latest from Kenya, and we'll keep our eyes on the ground looking at how the elections turn out next week. Thank you so much.